GEM International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond, recently discovered in Africa by a fellow Canadian junior, with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen. His website is thegoldandOilGuy.com. Welcome back to the show, Chris. Chris, I understand you have a feeling or a hunch or some kind of indication that we're about to see some kind of a market correction.
Yeah, based on cycle analysis and on the VIX, it looks like we're supposed to have a little bit of a bump in the VIX this week and see the equities market have a little bit of a pause to pull back. And, this morning on, I guess it's Tuesday morning here, we had a little bit of a pullback and the VIX popped up. And, I follow this, the NYSE up and down volume ratio, and we actually saw panic selling in the market this morning, meaning we saw three people hitting the sell button to every share on the NYSE to every one person buying. And when there's 3-to-1, meaning there's three people selling and only one person buying, it's usually enough that says that we've got some fear in the market and we'll see a little short-term bounce. And, that's what we've seen this morning. The market did dip into a little bit of an oversold condition, bounced back up, and it's trading near the highs this afternoon. But overall, I still see another down leg this week in the equities market, and I think that bodes well for the safe havens, which we have been seeing bonds and gold, silver, and miners move higher. So, I think this week is going to be a little bit, actually next week will be the turning week, I think, where we see equities put in a significant low, and we see a top put in the precious metals and potentially even energy stocks as they kind of go in opposite directions. And, I think a good chunk of that is going to have a lot to do with the U.S. dollar, which is finally getting down and showing signs that it's getting exhausted to the downside and getting close to a significant reversal level here, which we've been waiting about more or less a month and a half, 2 months for this kind of pattern to unfold. And today we're starting to see that a bottom could be put in the dollar, and that could be a knee-jerk reaction reversal for precious metals pretty much any day now.
Do we have any reasons behind this?
There's probably always going to be some type of reason, but I don't follow what's going so much on with the whole political side or events unfolding. I just look at the overall price action, and the price action is showing that we've got volatility expansion in the U.S. dollar. It's got a price pattern that has filled a measured move to the downside, indicating this downward thrust should be pretty much coming to an end this week. And we're also at a long-term support zone from back last year in August, September. All those things come together, and it points to either a significant bounce, just a knee-jerk reaction bounce in the dollar, or potentially a significant low, and we see the dollar start a multi-week or potentially even multi-month rally going forward here.
The talk I've heard lately was about weakness in the U.S. dollar. What's bringing it back up then?
I don't know what'll really bring it back up. I think it's just at a technical point here where the U.S. dollar is a good value, I think, for investors potentially to move into the U.S. dollar. There's U.S. dollar ETFs you can play, and it's more or less, I focus on it more or less as an investment, not so much as what's going on with the economy. So, from a technical standpoint, the chart pattern and the way that it has moved, it's showing signs that investors, I think, have given up on the dollar. It's lost a bunch of value, and that's, you usually need everyone to give up on something before it bottoms. And that's what we're seeing this week.
We'll have more with Chris Vermeulen right after the break.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're chatting with Chris Vermeulen. Chris, what's happening on the oil front? I hear the rig count is down, but production is still just booming away.
Yeah, crude oil, it's had a nice bounce up to a recent high from a few weeks ago. Overall, as you and I talked a couple of weeks ago, I think crude oil is going to trade in this big range here between more or less $47 a barrel and all the way down to around $42 a barrel. And with price fading back up, it's moved all the way back up to around this $47 per barrel mark in the last 2 days here. Yesterday it reversed down. Today it tried to move back up through that level and got slammed with selling volume again today. So it feels as though crude oil, the upside here is kind of pretty limited. I think the overall chart pattern on an intraday basis is pointing to lower prices for crude oil. I think the next stop we're going to see about $44 per barrel, and we could go even lower than that because some of the leading indicators like the energy sector stocks have had a really strong reversal to the downside. Yesterday, energy stocks rallied up to their 20-day moving average and then got slammed and sold back down to close with a reversal candle pattern. And today, energy stocks gapped higher and they've sold off on heavy volume again today. And that is kind of like the nail in the coffin that we should see follow through selling over the next couple of days. And with energy stocks leading the way, usually oil follows suit. So I'm anticipating some weakness in the energy sector. I think the best play here is actually kind of a net short position on energy stocks because I do feel as though the broad equities market is going to have a little bit more of a pullback. So it'll pull energy stocks down naturally. But with crude oil kind of topping out and the energy sector with reversal pattern as well, I think it bodes really well for a nice downward move in the energy sector like the XLE ETF looking forward to the next couple of days. And of course, if the U.S. dollar does find a bottom, a sharp bounce in the dollar will definitely help put some more downward pressure on commodities in general.
Has the summer driving season actually not appeared this year? I mean, I'm just speaking for people who said they just don't see the holiday traffic that usually they see on the road. And also another factor that could be playing in is even though people are in love with SUVs, they're now much more fuel efficient than they used to be.
Yeah, I'm not sure. I don't really get out a whole lot on the major highways to see what all the holiday traffic is doing. I know our town seems to be always busy, which is it's crazy compared to what it was 10 years ago. So I can't really gauge that, but obviously the whole fuel efficiency on vehicles has completely changed. For example, I went to Cape Cod a couple of weeks ago. It's a 12-hour drive, one tank of gas. It was $80 for me to drive there. That was a diesel vehicle, but we made it in one tank, which blew my mind. So it just goes to show how efficient these vehicles are now, and that's got to play a role in the demand for crude oil. I'm sure efficiency has increased dramatically, and it's only going to get better. And there's probably eventually going to be fewer and fewer cars running gasoline with the whole electric revolution taking place here.
Well, it may not get better because President Trump told the auto companies they don't have to meet Obama's efficiency standards.
Yeah, but, I think people also want to have efficient vehicles, and I think, obviously that could play a role, but I can't see car companies really going backwards so much. There might be the occasional company that may do that, but it's not in their best interest to just start pushing out gas guzzlers and, stinky vehicles. That's not, they're kind of looking forward to improving, not so much falling back to save a few bucks, I think.
Well, Volkswagen can probably personally thank themselves for people distrusting diesel vehicles as well. You can't believe the numbers they post.
Right, yeah, exactly. Yeah. It's unfortunate what some companies have done, and that's just the way it goes, though.
And Volvo has said you've likely seen the last generation of diesel engine from them, because everything else they produce going forward will be either hybrid or purely electric.
Yeah, and I think that's great. I think that's how most car companies are going to go. There'll probably be the occasional company that has a true old muscle car, a gas guzzler, but other than that, just to stick out in a niche. But other than that, I think everyone is going efficient, and all that is playing a toll on the oil industry.
We'll have more with Chris Vermeulen right after this.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're chatting with Chris Vermeulen. Chris, what's the story on gold?
Gold has been, it's had a nice bounce the last week and a half or so, and it's to be expected. Pretty much, it hit a measured move using Fibonacci extensions. It sold off, created a bearish pattern, and then continued to reach that measured move, meaning the momentum it had to the downside on the sell-off that we saw back in June, in June, that momentum played right out to where it should have gone, and we've had this beautiful technical bounce in gold, and we played a small gold play. We got in, made some money on this recent bounce, and closed out yesterday. I think gold in general is probably going to continue to grind up higher this week. Same with gold stocks and silver, but then again, I think we're walking right into a reversal here, where gold, silver, and miners are all about to run into resistance and reverse back down with the U.S. dollar. There's a lot of things coming into play here that point to lower prices for gold, and this is nothing more than a really perfect technical bounce. And after this bounce, I think we're seeing lower prices in gold, and I think we could see the next stop around 1175 for gold. And right now it's trading at 1242. So there's some pretty good potential for for gold to fall below the 1200 level and pick up speed and really flush all the way down to the 1175 area, at which point I think would be a fairly significant pivot low, and that could be the start of a new bull market from that point on, or a new, at least, major multi-month rally.
Is gold going to have a major rally if the markets do take a dip?
I don't know if gold will have a big rally. I think they might have a pop and a little squeeze higher. We could see 1275 from where we are. That's I think kind of pushing the upper range. So about $30 per ounce from where we are today. I think that would squeeze it up to a level where if we do have enough fear, that's probably where it'll tag the highest point before it reverses back down. But I don't see gold really taking off and breaking above the 1300 mark from this point forward here.
Usually, if somebody anticipates a breakdown in equity markets or an adjustment, usually gold will tell you that people are stocking up. But are they this time around? Or do they have enough? I don't think that investors really see the equities market having a big sell-off. Actually, I think investors in general are more bullish than ever on the stock market. And I think we're just seeing short-term technical traders kind of rotate out of equities and into precious metals.
And I think that's all it is. I don't see people loading up on gold at this point, anticipating a massive bear market in stocks. I think, again, this is just more active investors and traders just simply kind of moving their money from the hot spot out of into new hot spots as one starts to kind of show signs of weakness.
So this really is more of a juggling market, taking a look at almost, I guess, day to days to see what performs well that day, that week, instead of looking really long term.
Yeah, these type of price actions we've seen over the last couple of weeks, it is really a short-term trader, a swing traders kind of a type of time frame. We're not really seeing any major significant highs or lows that long-term investors should be all excited about. I think if you're a long-term investor, you've started to accumulate some gold, but you still need to be long equities because equities are still in a full-blown bull market. I think there could be a much better price. You could probably get in a better price of gold and silver potentially in a few months. And depending how things unfold later this year, I think that we will be walking into one of those really significant points where you need to potentially move mostly to cash or start to load up on gold and precious metal safe haven plays, because I think we are slowly getting closer to a bear market in equities, but we're not there yet. Kind of when Trump took control, he rejuvenated the market for another massive leg, and we have to wait for this leg to actually show some more signs of weakness, which, the NASDAQ and the tech stocks, the heavy selling we saw over the last few weeks, that is a shot across the bow that there is definitely some big money starting to rotate and lock in gains, but that's not enough for anyone to start shorting the equities market, anticipating a bear market, because this could continue much higher for several months before we see a major turning point that investors need to focus on.
Chris, thank you so much for chatting with us.
Always a pleasure, Jim. My
guest has been Chris Vermeulen, his website, thegoldandOilGuy.com. You're listening to HowStreet.com radio. Check out our popular YouTube channel, Talk Digital Network. The quality there is terrific, folks. Find us on Twitter at Talk Digital Net. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.